Hi, welcome to the Market Alert for Thursday the 15th of September 2016. So yesterday we saw the market trading sideways before moving higher, and we had the release of the crude oil figures at 3:30, which we forecasted a surplus of 2.8 million, came out at minus 0.6. This didn't have any effect upon the market, which it should have done. We then had a sell signal, saw the market move down, and then prices became sideways with two consecutive losses, and they weren't small losses either. The market then traded sideways, just hugging the 18,098 level before we then had another sell signal after the market had been sideways for a couple of hours, and then three consecutive winning trades. And the reason for these sell trades and their success was that stocks suddenly tumble in a catch down to oil slump. If we go and have a look at the oil chart, you will see, if I can find it, the market moving sharply lower during yesterday's session there. Let me just a bit more screen space here as well. There you go. So you can see that the oil market sold off, and if you have a look at an hourly chart, you can see exactly what happened in the latter part of the trading session there, and this sent the stock market lower as well. On the overnight, the market's been down, but then come back and found support at that major psychological level of 18,000, which I've spoken about many times before in the market alert. We've got the market sort of building this sideways, but certainly making lower highs, and I wouldn't be surprised now if the market goes on to wait for the interest rate decision by Yellen, which will be out this coming Wednesday, 21st of September. Either way, she's got no credibility now. She doesn't do anything, it's doomed. If she does, it's doomed, and if she reduces, it's doomed. She's painted herself into a corner, or the Fed has, with their promises of rate increases, which they've never delivered on. They say they're data dependent. Well, the data, apart from the employment figures, says that they should increase interest rates, and the rest, productivity, shows that they shouldn't. So it's an interesting time with regards to trying to increase rates. They need to increase rates because the bonds are, the more that are printed, are more becoming negative. It's not helping at all, and it's going to end up in a financial catastrophe if they don't actually get the job gripped. But this is what you get when you don't let the banks crash as they did in 2008. We'd have been through it all now. Yes, it would have been unpleasant and whatever, but when you keep bailing out and keep pumping money into the markets, this is what you end up with. You end up with a far worse situation, far bigger debts, far bigger bubbles, and eventually the markets all have to return to fair value. So the academics that are in charge of the central banks are just playing with the masses, and it's just one grand experiment. It's just crazy, really. But there you go. It's nothing we can do about it at this time. So today we've got, I think Carney's speaking today, is he? Let's have a look. We've got the Bank of England figures. Blimey, there's a lot of news out today. Let's have a look. But everything's out before 2:30, so it doesn't really matter. It might help the market a bit, but there's a lot of news out there today. Don't think Carney is actually speaking. We've got the official bank rate, but not anything. There's a policy summary. Whether he's speaking or not, I don't know, but that will be out before the market actually opens at 2:30. So the implied 1481 down slightly on yesterday. Again, you can see we're spiking up now with the uncertainty in the background there as well. Right, that's it for today. I will see you in tomorrow's edition of the Market Alert. As ever, thanks for watching, also for your support, and as ever, see you tomorrow. Thanks for watching.